Hey everyone, so I am sure you have noticed some negative sentiment around Apple stock lately, which is off its recent highs by around 10%. And as you can see on the chart, it is approaching the 50-day moving average on the weekly, which has acted as support in the past. It is worth noting that the next significant support level on the weekly chart is the 200-day moving average, which is around 22% lower from where the stock last traded. So, from a technical perspective, Apple is approaching a significant level. So, you may already know that Apple is a champion in terms of market cap, with its valuation being close to the 3 trillion mark. Price to earnings ratio is around 30, and this is higher than the historical average as reflected in this chart, meaning the stock is trading to the expensive side, but not insane compared to other companies. Despite all the negative sentiment, the average target price is $197, which is around 9% higher from the levels it is trading now. And as you can see, the stock does not tend to be volatile. Adding to the negative sentiment, two high-profile investment banks have recently downgraded the stock to neutral and underweight, which is a more diplomatic way to give a sell rating. Barclays noted that iPhone sales were soft, especially in China, while Bloomberg was reporting that the Chinese government has issued informal guidance forbidding state employees from using iPhones, although the Chinese government has denied issuing such guidance. As if the negativity wasn't already near peak levels, there are fresh reports the US Department of Justice is preparing an antitrust lawsuit targeting Apple's exclusive features such as the Apple Watch iPhone integration and iMessage service, along with potential scrutiny on Apple Pay. This legal challenge, if materialized, casts a shadow over Apple's future prospects. But in the bigger picture, what is Apple to the stock market? It wouldn't be an exaggeration to say that it is the market itself, since it is a top holding in the SPY and the QQQ, two high-profile ETFs reflecting the S&P 500 and Nasdaq respectively. Having said that, a negative view on Apple likely translates into a negative view for the market in general, since Apple's decline could have a noticeable impact on the performance of these ETFs. What should we expect then? Over the past decade, Apple exploded higher with gains exceeding 800%, as you can see on the chart. Rightfully so, since it has experienced significant growth on the back of strong financials. To conclude, I do not think Apple stock will crash in 2024, since the company has a strong leadership, a great track record, and its products have become consumer staples. Yes, it may have fallen behind on the innovation front, but this may soon change due to recent developments in AI. Although a pullback is likely in the medium term, even up to 20% back to the 200-day moving average on the weekly chart, I do believe Apple will continue the positive momentum. Thank you for watching.